Let's talk about the U.S. economy now. The inflation in the United States appears to be cooling off slowly. The latest consumer price index report for November shows inflation is up 7.1% over the past year. That's actually down from 7.7% back in October. Meanwhile, the Federal Reserve is set to meet this week, and it's expected to raise interest rates once again. Let's bring in CBS News reporter Sarah Ewall-Wice to talk more about the new data. So, Sarah, good to see you. What does it signal about the health of the U.S. economy right now and the efforts underway to combat inflation?
Yeah, so this is a good report, beating expectations. You mentioned that 7.1 year-over-year number. That was actually expected to be 7.3%, so lower than we thought it would be. The month-over-month was up 0.1%, also lower than expected. And so these have been gradually easing, and some of these numbers are the lowest we've seen since 2021. So finishing the year with some good news going into 2023. Some things to keep a close eye on. The largest component of the increase in prices is shelter prices. Those were up, of course, 0.6% last month, slightly easing from 0.8% the month before, but that is a good chunk of change when it comes to people's budgets, and that is part of what made prices rise year over year and month over month. Good news, though, gas prices down 2% last month, and that actually could be continually lower. Right now, what we know is the average price of gas is $3.24 across the country. We've seen prices going down. In many states, gas prices are below $2.99 a gallon after going up a lot over the summer, specifically hitting those highs in June. So that's a good sign as well. Really, across the board, nice numbers. Obviously, inflation is still much too high, but this does show it's going in the right direction. The other thing I would factor in here is airfare. Of course, we're all getting ready for those holidays. Airfare was down 3%, so that's a bit of good news as well when you look at these.
All right, so things are slowing a little, or cooling a little bit, still a far cry from 2%, which is what the Federal Reserve wants to see. We know that an interest rate hike is coming. And we have a pretty good idea of how much it's going to be, right?
Yes. So right now, the Fed is meeting today and tomorrow. This is their final meeting of the year. And right now, we are expecting a 0.5 percentage point hike. That was what was signaled by members of the Fed. Economists expect that. Investors expect that. The question is whether they would go with the 0.75 of a percentage point hike. They've done that 4 times this year. They've been extremely aggressive, but it looks like that'll be easing some. So really, the two big questions we now have as the Fed wraps up the year with this final meeting is how much more they will continue to raise the federal funds rate next year. And then once they hit that terminal, the end rate that they're going to raise it to, how long will that last? The president of the New York Fed and the president of the St. Louis Fed signaled recently that we could see that rate remain high through all of 2023 and into 2024 before going down. We could see the federal funds rate go up above 5% next year. So that is something that it's very interesting to see where the Federal Reserve Chairman Jerome Powell indicates officials are thinking heading into the new year. But we are expecting, of course, that 0.5 percentage point increase at the announcement expected tomorrow afternoon.
So, Sarah, as you know, the Federal Reserve Bank of New York Center for Microeconomic Data released its November survey of consumer expectations. What does it tell us?
Yeah, so the good thing about this is it shows that expectations for inflation have gone down across the board. The 1-year expectation is the lowest we've seen since 2021. And what does that mean, really? The thing is when you expect inflation, you change your habits, both people and companies. And when you do that, you could further fuel inflation. If you aren't expecting inflation so much, as we've seen this decline in those expectations, habits don't change as much. It could lead to good news in the future as a part of this moving forward. And so it's something that both officials and companies are keeping a close eye on and have been for quite some time.
So around this time last year, though, economists were predicting that inflation would swiftly fade in 2022. And you could argue that the Federal Reserve also sort of miscalculated. That's why we're seeing these aggressive rate hikes now. So what are economists forecasting for next year? And should we even believe them?
I think a healthy dose of skepticism is understandable after the year we've had, but they are expecting that inflation will go down next year. I don't want to sound like a broken record. We are in a very different place than when I was talking about what the expectations were and the forecasts were this time last year. But, you know, something to keep in mind is the Federal Reserve Chairman Jerome Powell did recently say that there's a high degree of uncertainty when it comes to inflation. And like we've both mentioned, inflation remains too high still. With that said, though, this time last year, the Fed had not hiked rates at all. This year, they hiked it 7 times very aggressively. So we're in a different place when it comes to action by the Fed. We also are in a different place when it comes to supply chain challenges. Those bottlenecks have eased quite a bit. The spending habits of people across the country have also changed. We've gone from the goods, people buying up goods. There's been an easing more into the service sector again as the pandemic has kind of leveled off or eased some. So there are a lot of changes over the past year which do provide for optimism. Like I said, cautiously optimistic, something that the Treasury Secretary Janet Yellen did say when she spoke to 60 Minutes this week for an interview with Norah O'Donnell, is she did say she expects a substantial reduction in inflation next year. But of course, there's still a long way to go.
Indeed. Sarah, thank you very much.
Of course.